What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the craziness that happened today in the markets. And oh boy, did we have a bloodbath in the markets today. Yes, we did. Russell 2000 went down 1.55%. Nasdaq went down 2.10%. Dow Jones went down 1.47%. And the S&P 500 went down 1.81%. So at last, guys, we got the Cpi Data Report of January today. And it was nasty, guys. Nasty, let's face it. So inflation month over month came out at 0.6%, whereas the estimate was 0.4%. And the big problem was inflation year over year. It was being expected at 7.3%, and it came out at 7.5%. So we are having the, let's say, highest inflation rate since 1982. But mind you, and obviously we are getting out of a pandemic, a situation that never happened before. You guys already know that. So at first, guys, as soon as the trading session opened today, the S&P 500, Nasdaq 100, Dow Jones, most of the indices dropped a lot. The S&P 500 found support at around 45.20 or something like that, and then we started to pull up and pull up and pull up. The S&P found a very important resistance at 4,600. I am going to show you that when we go over the S&P 500. We pulled back a bit, and at around noon, guys, Mr. James Bullard, the president of the Federal Reserve of St. Louis, killed the day. This guy said that he supports a 1% interest rate hike by the start of July. And he also said, and I'm going to read here for you guys, I'm quoting, right? I was already more hawkish, but I have pulled up dramatically what I think the committee should do. So this guy, which by the way is at the more hawkish end of the Fed, thinks that we are likely to see a 1% interest rate hike in July. And now the big question over here is, guys, did the markets price in a 1% interest rate hike throughout this year? Can that actually happen? Can the Fed be that aggressive? So that's a big question mark. Keep in mind that the next CPI data report is coming out in March, a bit before the next Federal Open Market Committee. So we can make the case that the Fed is going to be data-driven when it comes to making any decision. Keep in mind as well that in November, we are going to have the midterm elections. If the Fed happens to be very aggressive, raising interest rates in order to defeat inflation, we might go into a recession. And that is going to be obviously bad news for Joe Biden, for the Democrats. So I don't know, guys. This is a tough one, in my opinion. And can we revisit the lows of January 28th? We don't know yet. So as of now, we need to keep a close attention to whatever any other president of any other Federal Reserve says from now and until the next CPI data report or until the next Federal Open Market Committee. And mind you, guys, keep this in mind. And I showed you a chart a week ago in one of the videos that we posted last week, that the markets are doing what they usually do before the beginning of a new interest rate hikes cycle. So what we are seeing as of now, this volatility, the Nasdaq 100 being 11% of the highs, S&P 500 being, 7 or 8% of the highs, this is what, from a historical standpoint, the markets do. There's nothing new about what we are seeing as of now. And afterwards, once the new cycle of interest rate hikes, begins, then the markets usually cool off and the markets usually go up. So we can make the case, if we want to have a bullish perspective from, in regard to the volatility that we are seeing as of now, we can make the case that this volatility is going to last until March. when finally the Fed is going to raise interest rates. I believe that since today we got a way worse than expected inflation reading, we cannot rule out a 0.50% rate hike in March, guys. That is definitely in the cards. So let's see what happens, and hold on tight, guys, because this is going to be a wild ride, at least until March, in my humble opinion. The sectors, what happened with the sectors of the markets today? Red across the board. However, guys, and despite the fact that every single sector ended up today's trading session in the red, the sectors made sense, guys. And why? Well, because the sectors that held up the best were the sectors related to the inflation trade, something that I have told you guys about in multiple occasions here in the channel. So the best performing sector today was materials, which went up 0.58%, followed by energy, which went, materials went down today. I take that back, guys. So materials went down today 0.58%, energy went down 0.62%, and the financial sector went down 0.88%. So the inflation trade was the trade that performed the best today. That makes sense. And on the flip side, guys, the tech sector got absolutely killed. And for the most part, the big tech stocks, Google, Amazon, Apple, Tesla, all of those stocks got absolutely decimated today. And also SMH, the semiconductor ETF. So when big tech and when SMH goes down in such, an important way during a trading session, you can be sure that the tech sector is going to go down a lot. So the tech sector went down today 2.61%. And if you guys remember, I have told you on multiple occasions that the real estate sector is inversely correlated to the 10-year Treasury yield. Today, the 10-year Treasury yield finally, at last, since July of 2019, I think, finally burst above 2%. That was something that was going to happen. It was inevitable. I told you guys that the 10-year Treasury yield was going to burst above 2%. I think that in the video that we posted on either Monday or Tuesday, and it finally happened today. There's nothing wrong about it. But the 10-year Treasury yield went up today something like 5%. And since the real estate sector is inversely correlated, as I just told you guys, then it got absolutely crushed today, going down 2.85%. And I have also told you guys on multiple occasions that before the pandemic started out, or before the pandemic came around, the 10-year Treasury yield was way above 2%. And most of the growth stocks and tech stocks and higher multiple stocks were performing well. So there is no reason to believe that since the 10-year Treasury yield burst above 2%, that implies that from now on, all of the tech stocks and all of the growth stocks and all of the higher multiple stocks are going to get killed until forever. So that isn't going to be the case, at least in my opinion. And if we take a look at the advances and declines distribution, nasty day across the board, guys. Today we had 2,522 stocks going up, and we had 5,000 stocks for the most part going down. Nasty but nasty day across the board. And before going over the indices, and today we're going to go over the earnings reports of Affirm, which today was an absolute joke, guys. So someone leaked throughout a tweet the earnings report of Affirm ahead of time, and the stock dropped like a brick, and then it went up again. I actually took advantage of the drop of Affirm, and I took a very quick trade that I am about to show you guys. We are also going to go over the earnings report of Aurora Cannabis, Zillow, and CrowdStrike. So stay there, guys. We're going to have fun today. Okay, let me show you over here my trades. Today I had a very active trading session, guys. So I decided to close a call option that I purchased yesterday on Goldman Sachs. So yesterday I purchased the $370 call that expires on June 17, and I paid yesterday $2,500, and today I decided to close out of this position, lucky enough, because then Goldman fell off a cliff into the closing bell, and I was paid $2,690. I ended up making over here $170. Let me pull up Tesla here, guys. Check this out. What happened in the case of Tesla? So I bought back a covered call that I had sold recently. Check this out, guys. On January 27th, a day before we bottomed out so far, I sold a leap, actually, the $2,000 call that expires in January of 2024, and I was paid on January 27th $11,000, guys. And today I decided to buy back this call, and I was paid I paid $10,460. I ended up making over here $560. And let me show you, I also bought back a put that I had sold on hot mining. Let me show you over here. So what happened in the case of hot mining? So I sold 4 contracts, 4 put options on January 13, the $5 puts that expire on, this is April 14, and I was paid on January 13, $252. And today I decided to buy back these 4 contracts, and I paid $148. I ended up making over here something like $110. And lastly, I also, let me show you, this has been one of the quickest trades ever for me. Affirm, take a look at this. I took advantage of the crazy volatility that we saw once the earnings report of Affirm was posted on Twitter, apparently accidentally. So I purchased 35 shares, guys, at $52.71. This was a trade that I wanted to take based on a very very overextended oversold condition of Affirm. So I purchased 35 shares at $52.71, and I paid $1,888. And this was guys, I'm not going to lie to you, this was a 30-second trade, 45-second trade, at most. So I closed this position in 35 or 40 seconds at $55.96, and I was paid $1,958. I made $120 over here in a matter of 30 seconds or 35 seconds, guys. One of the quickest trades that I have ever taken in the stock market. So I ended up making today $110 over here, $110 with hot mining. I made $200, $170 with the call of Goldman Sachs. That's something like $450, and $560 with the covered call of Tesla that I bought back. I ended up making today $900, guys. I had a very solid day today, no doubt about it. Now let's go ahead and take a look at the S&P 500. It went down today 1.81%, and it closed today's trading session at 4,504 points. I am going to pull up here quickly, guys, the 1 day, 1 minute chart. No, I need to pull up, let me see, the 1 hour chart. Take a look at how 4,600 has turned into an absolute nightmare for the bulls of the S&P. So at 4,600 we failed today, we failed yesterday, we also failed on February 2nd, and we also failed on 3 occasions in mid-January. So clearly, guys, the most important task for the bulls of the S&P, if we happen to see a relief rally or if we happen to see the S&P 500 going up, is going to be closing above at least one trading session above 4,600. And in order to do so, the bulls need to, first of all, take on the 100-day moving average, which take a look. The bulls yesterday closed above the 100-day moving average, but other than yesterday, it has been very tough for the bulls to close above the 100-day moving average. So they need to burst above the 100 DMA and then try to close a trading session above 4,600. This is going to be a tough one for the bulls, no doubt about it. So I already told you 4,600, the most important area of resistance for the bulls. And in the case of the bears, guys, they need to take on this 200-day moving average at 4,451 points. So let's see what happens, guys. As I just told you, And now we have a very big question mark over here. Did the markets price in a 1% interest rate hike throughout this year? We don't know. We don't even know if that is actually going to happen, right? So anything can happen when it comes to the markets today. This is going to be fun, at least until the next Federal Open Market Committee in March. Nasdaq 100 goes down today 2.33%, and it closes today's trading session at 14,705 points. The most important task for the bulls over here, and as I said in the video that we posted last Tuesday, is going to be taking on this 200-day moving average at 15,000 points, guys. And on the flip side, the most important task that the bears need to carry out would be taking on 14,400 points. We are looking at a previous area of support back from early October, and at the same time, we are talking about a former area of resistance back from late June of last year. If the bears can take on 14,400 points, I'm not going to say good night Irene, guys, because good night Irene would be taking on 13,700 points. But this would be very, but very negative, no doubt about it. By the way, the VIX went up today. I didn't tell you guys about the VIX. It went up today 20%, and it held 20 points like clockwork. 20 points has turned into a very critical area of lower support for the VIX. And now let's go ahead and take a look at, not Zillow, because let's take a look at Aurora Cannabis. By the way, I have a gamble over here. Let me show you. ACB, Aurora Cannabis, is reporting earnings today. It went down 1.08% throughout the regular trading session, and it closed today's trading session at $4.59. Let's see what is going on over here after hours. So, yeah, Aurora Cannabis went up to $5.07. That was a push to the upside of 11%, and as of now, it is trading at $4.75, pretty much the closing price of today's trading session. ACB is up 3.68% after hours. So what happened today with what happened over here with the earnings report of Aurora Cannabis? Let's see. I purchased call options, guys. I took a gamble. I purchased the $4.50 call that expires tomorrow. So let's see what happens. We'll see. I only purchased two contracts, and I invested $90. Nothing crazy. Okay, so let's see. Do I have the information complete over here? Thinkorswim, is it? Okay, Aurora Cannabis reports Q2 sales at $60.59 million, down from $67.67 million. So they are missing on sales, I think, right? Let's see. Okay, adjusted EBITDA improved by 22% to a loss of $9 million versus Q1 of 2022. Okay, so versus the amount of money that this company lost in the previous quarter. What else do I have over here? Let's see. Aurora Cannabis now expects to realize upper end of $60 million to $80 million range in total cost savings by 2023. Let's see, $60 million annualized savings implemented to date. So this company is trying to save some money. Okay, Aurora Cannabis stock gains after first beat on pot sales in more than a year. But I don't have, the information that I have over here isn't complete, guys. So it looks like when it comes to sales, they are down from $67.5 million to $60.59 million. Global cannabis net revenue of $60.6 million. So I have to take a deeper look at this earnings report, guys. And the information that I have handy over here doesn't say much. So let me pull up here the 4-hour chart. And as of now, ACB, guys, is right below a very important area of overhead resistance at $5.10. This 180 SMA on the 4-hour chart. The RSI of Aurora Cannabis is at 62 points. Still healthy from a technical standpoint. So let's see what the reaction of the markets looks like tomorrow, because if the bulls of Aurora Cannabis of ACB can take on $5.10, they might be able to fill the next gap up to $6.11. The 100-day moving average. I am going to draw a line over here. So $6.11 is an area that coincides with the 100-day moving average, but we are also talking about a former area of resistance back from December 23rd of last year. So if any of us were able to take the trade from $5.20, $5.22 up to $6.14, get this, guys, we are looking at a 15% profit. So let's see what happens tomorrow. I got some calls. That was a little gamble. And I still need to take a deeper look at this earnings report because the information that I have as of now isn't complete. And now let's go ahead and take a look at the earnings report of Cloudfur. Ticker symbol NET, and take a look, guys. Let me pull up here the 1 day, 1 minute chart. And in the case of Cloudfur, it is up a lot after hours, guys. Cloudfur went up today 1% during regular trading hours, and it closed today's trading session at $115.96. So as of now, Cloudfur is up almost 8% after hours, guys. So I think that they killed it, most likely. So let's see, what do we have over here? We have guidance, which is good. Okay, adjusted EPS came in at 0, so neutral. And sales came in at $193.60 million, beating the estimate of $184.90 million. So I don't have the competitive when it comes to EPS, and it came neutral, 0. So they didn't make any money, they didn't lose any money, and they beat on sales. Okay, we have guidance over here. So Cloudfur sees Q1 adjusted EPS from 0 to 1 cent versus 1 cent estimate. So they are guiding pretty much in line when it comes to EPS, and sales should be, according to this company, somewhere between $205 million up to $206 million versus $195.8 million estimate. So they beat when it comes to guidance, and I don't have the competitive when it comes to current EPS, and sales also beat. So a very decent earnings report over here when it comes to Cloudfur. So what could be potentially happening tomorrow? The stock of this company is a bit overbought, guys. You guys can see the RSI of Cloudfur at 77 points. And as of now, the bulls are about to deal with this 200-day moving average at $124. The bulls are trading at exactly $124 after hours. So watch out with Cloudfur tomorrow, guys, because if the bulls keep on pushing higher, then maybe the stock of this company can fill the next gap up to $138. $138 happens to be a previous area of resistance back from mid-September. So if the bulls were able to fill this next gap, so if we are able to take a trade on Cloudfur from $125, $126 up to $138, we are looking at a 10% profit trade. And on the flip side, guys, what happens if tomorrow we see profit taking, as we saw in the case of Enphase and as we saw in the case of Snapchat? Then watch out for a retracement of Cloudfur down to $116, which happens to be a previous area of resistance back from early January, and also happens to be a former area of resistance that coincides with this 180 SMA on the 4-hour chart. So no doubt about it, Cloudfur, ticker symbol NET, is going to be on the very top of my personal watch list tomorrow. And this was a very decent earnings report. And now let's go ahead and take a look at Zillow, which absolutely dropped the ball on its latest earnings report, on the earnings report that was posted in early January, and they seem to be turning it around, guys. Take a look. Zillow is up a lot after hours. Zillow went down today 1.75% during regular trading hours, and it closed today's trading session at $48.79. And as of now, Zillow is up 20% after hours. Oh boy. Most of the companies that have reported earnings throughout this new season of earnings have done pretty well, guys. I mean, except for there are some exceptions to the rule, right? Like Facebook, obviously. But most of the companies have posted decent earnings. Okay, so Zillow, what happened? Well, I have guidance, which is good. Do I have okay, let's see. Wedbush now. Okay, reports fourth quarter and full year 2021 financials result. Okay, so Q4 sales came in at $3.88 billion, beating the estimate of $2.78 billion. So they beat on sales by a long shot. Do we have any guidance? Do we have, let's see, swings to Q4 adjusted loss despite higher revenue? Issues Q1 guidance. Zillow's lost more money than $230 million in its iBuying fire sale, but the stock is still surging, says a news over here on Thinkorswim. And okay, the loss was or came in at $261.2 million, but I don't have the competitive over here, so I don't have this information complete either, guys. But I think that guidance should have been solid, right? Because the stock of this company is up a lot after hours. I'm not gonna touch Zillow, mind you guys, before I take a deep look at the earnings report, because as of now I have some information, on the surface, and the last or the earnings report that they posted back in November was a total disaster. The CEO dropped the ball. He said that they got wrong their business model. So I have to, before even thinking about taking a trade over here, I have to take a look at the earnings report in a, let's say, deeper way. So after hours, Zillow is trading at $58. It is slightly above this 180 SMA on the 4-hour chart, with the RSI at 74 points. So can Zillow fill the next gap up to $64, a previous area of resistance back from early January? If so, if Zillow can fill this next gap, as of now, Zillow is trading at $58 after hours, up to $65. We are looking at a 12% profit. However, I don't think that this gap is going to be filled immediately because the RSI is very elevated at 74 points. So if I happen to be interested in starting a position on Zillow, I would rather see a pullback, guys, down to a previous area of support back from November at around $54. If Zillow happens to pull back and find support at $54, and if I pick up some shares or we pick up some shares at $54, and if we happen to be able to write them up to $64, we are looking at a 21% profit trade. This makes more sense than chasing Zillow to the upside with its RSI already being at 75 points. And the last stock of this video is going to be the talk of the town today, guys. This was absolutely unbelievable. Affirm. And I think that I took the quickest trade ever for me with Affirm. So Affirm went down today 21%, and it closed today's trading session at $58.68. And mind you, guys, I give these guys some business, and this company works in a very smooth way, guys. Very good service. The other day I went to Walmart because I got a new iPad, and my loan was approved in a matter of, 2 minutes or something like that. The process was very easy, and yesterday I made my first payment, and the process was extremely easy. I got on Affirm's website. I set up an auto pay, and the whole thing took me 1 minute. I think that the service that this company provides is great service. But obviously, this is a higher multiple stock, and obviously, a lot has been priced into the future, despite the fact that Affirm is trading as of now. Let me check over here, 72% of the highs. But I am a customer, guys, of this company, and I was able to confirm from my personal experience that this company provides a very good service. So this is a company that I feel some sympathy for. Let's just put it that way. So what happened? This was unbelievable. So someone leaked the earnings report ahead of time. So let's see if I have the information over here. Okay, I have guidance. Okay, EPS came in at 57 cents, missing the estimate of 34 cents. So they missed on EPS. And I mean, obviously, negative EPS. This is a company that doesn't make any money. This is a negative EPS. It was expected at 34 cents, and they lost 57 cents per share. Okay, so sales. Where are sales at over here? Okay, sales came in at $361 million, beating the estimate of $328 million. And when it comes to guidance, okay, so sales should be somewhere between $325 million up to $335 million versus $330 million estimate. So they beat on guidance when it comes to sales. And full year 2022 sales should be between $1.29 billion up to $1.31 billion, beating the estimate of $1.28 billion. So this was a very decent earnings report, guys. They beat across the board when it comes to guidance. Yeah, when it comes, I mean, we didn't have guidance for EPS, but we do have guidance for sales, and they beat on sales guidance. They missed by a long shot when it comes to EPS, and they beat on sales. So it was some sort of mixed report. But by the way, I actually saw the tweet with the earnings report leaked ahead of time, and the guidance that I read was very solid, guys. They are seeing a lot of growth as of now, right? And I mean, I don't have the guidance over here. Let's see, circuit breaker, revenue, factors, consensus, and revenue. Take a look at this, guys. Revenue 1 year ago was $204 million, on Q2 of last year. And now they are posting $361 million in revenue. This is a big growth, guys. No doubt about it. Almost 100%. So this company is growing, and it is growing fast. So I am going to keep a close attention. I'm going to be keeping a close attention to Affirm tomorrow. And check this out, guys. $54 is an interesting spot. We are talking about a former area of support back from July of last year. And after hours, Affirm is trading at $57.46. And the RSI is at 38 points, so Affirm is a bit oversold. So if tomorrow I happen to see a process of consolidation slightly above $54, I might be interested, guys, in picking up some shares of Affirm once again. In which case, let's see that we pick up some shares at $55 or $56. And if we happen to write them up to the next important area of resistance at $62, we are looking at a 10% profit. $62 happens to be a former area of support back from mid-August of last year, and also a previous area of resistance back from mid-July of last year. So I think that Affirm is going to be the talk of the town tomorrow because of the situation that happened today. And a process of consolidation, from what I said, slightly above $54 would be a good sign in order to start a position on Affirm holdings. And with Affirm, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys once again on Monday. 3 or 4 hours after the market closes. Peace out and enjoy the ride, guys. Bye.